Ladies and gentlemen, good day and welcome to Mahindra Lifespace Developers Limited Q2FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us on this call today Mr. Amit Kumar Sinha, MD and CEO, Mr. Avinash Bapat, CFO, Mr. Kumar Sriram, Vice President, FP&A Costing and IR, and Mr. Ravindra Basu, Head Investor Relations. I would now like to hand the conference over to Mr. Amit Kumar Sinha, MD and CEO. Thank you, and over to you, sir.
Thank you, Michelle. Good morning, everyone, and welcome to our Q2 FY25 earnings call. At the outset, I would like to thank everyone for participating in this conference call, and I also want to wish all of you a happy Diwali and season's greetings to you and your families. Let me cover 3 or 4 things. First, I'll quickly cover some of our learnings on the market. Then I'll cover quick highlights of our sales, launches, business development, and our IC and IC business. And then subsequently, I'll hand over to Avinash for the financials, and then we'll take on any questions that you might have. So let me just quickly cover on the industry part. All of you know very well, so I'll go through it briskly. The industry continues to remain healthy. Overall strong absorption growth across the markets. Some markets where we don't participate seems to be slowing down a little bit, especially NCR and Hyderabad. But overall, there is a stable market all along. The momentum in the residential market is there. If you see the overall quarterly sales, I think very high numbers that we noted, 87,000 units were sold in this quarter, which is a good growth over the last similar period last financial year. Very good launch pipeline across all sets of players. Q3 calendar year, which is Q2 financial year, was also very good from a launch perspective. The overall positive news at that we carefully watch is the inventory level. We look at the inventory overhang. It's at 14 months at the end of 9 months of 2024. And overall, I think the mortgage payment to monthly income ratio is also very stable across the markets, across the country. The Mumbai and Pune markets saw the highest volumes of units launched in Q2 FY24, which is Q3 2024. Together they constituted roughly 43% of the units launched during the quarter. So overall healthy market. Mumbai, Pune, as you know, is a big priority for all of us. MMR had a very good absorption, 9% year-on-year growth. New launches were also very healthy. Pricing continues to be at 6% growth compared to last financial year, the same period last financial year. And similar positive trends that we see in Pune as well as Bangalore. In fact, in Bangalore, what we see is absorption seems to be at one of the highest levels, and they're outpacing the new launches. And as a result, the pricing is seeing much higher growth, close to 10% year-over-year. So very healthy market. We see some pockets of slowdown, as I mentioned, not degrowth, but actually the reduced growth rate that we see in a couple of markets, as I mentioned earlier. The other part is our industrial business, which had a great first half of the year for us. The manufacturing GD pushed by the government, Viksit Bharat, and all the announcements on the infrastructure side, including the 12 industrial parks through National Industrial Corridor Development Program, NICDP, which was announced in our budget earlier this year. And the National Industrial Corridor Program All those things are very, very healthy. Already a lot of spend has happened, and we'll continue to see more and more spend come in the infrastructure. We also see a lot of global players trying to find home for themselves to set up manufacturing or industrial units in India. We have also seen many domestic companies scale their presence in India for new opportunities, new industrial or new manufacturing setups, as well as a capacity enhancement. So overall, we see that industrial part continues to be super exciting for us as well. Now let me just cover the sales part. Let me cover both H1 as well as Q2. We achieved a pre-sale of in H1 1,415 crore versus last H1, which was 800 crore. So this is a roughly 77-78% growth compared for the similar period last year. In the quarter two financial year tends to be slow because of multiple reasons, seasonality. There were days that were lost to Shraddh and many other reasons. So we'll see we have a 397 crore in quarter two FY25 versus 455 crore in the last financial year. But we have more and more launches planned in the later part of the year. Our new launch sales contributed roughly 931 crore of the 1,415 that you have seen. And also some healthy quarter two revenues came from sustenance sales. H2 has always been great for us, as you saw in the last financial year. We have lots of launches which are in advanced stage of approvals and launch readiness. So you'll see lot more exciting news coming from us on the sales side, which I'm covering in the next section, which is launches. H1 launch was benefited from some of our outstanding projects that were launched earlier in the year. Mahindra Zen in Bangalore is almost sold out. 207 units out of 228 units have sold. Mahindra Crown, codename Crown in Pune, similar response. We have 56% of the inventory is already sold out. Our second plotted development in Chennai has also received a very strong response, and we continue to sell them. We have launched a new tower in Tathawade, which is Tower A. The value is of 325 crores. Kalyan 2 Phase 2 was launched, which has a GDV of roughly 225 crores. Busy quarter and H2 ahead for us. We are planning Phase 2 of Vista, given the success we had in Vista Phase 1 and Kandivali, we are just moving that up. We are also moving Crown Phase 2, codename Crown Phase 2 in Pune. Zen 2 is in the pipeline in Bangalore. The Alembic Whitefield land that we acquired in March earlier this year, that's also in the last stages of final stage of approval. Similarly, codename Navy in Malad is also in the final stages of approval. That's our first society redevelopment launch. We also have a plotted project in Pink, which is waiting for final approval. This is a plotted development in our Mahindra World City, Jaipur. So all in all, lots and lots of launches that we have planned for H2, and we're getting ready to maximize our sales through those launches. Business development, as I've covered in the previous, we are getting a lot of deals, good set of deals that we are triaging through very carefully, thoughtfully. The expectations of the landowners tends to be very high in boom markets, so we are going through all the deals very carefully and making sure that we have the ability to get the threshold returns we expect from each of our projects, and that's roughly going well. So in the first half, we had 2050, which is the society redevelopment project that we won in Borivali earlier this year, Sai Baba Nagar, and a small parcel of land we had acquired next to Zen in Bangalore. So those are the two, and we have very healthy pipeline, and you'll continue to hear more news from us in the next few months. Finally, on the IC and IC side, IC Life business has done really well for us. It has given us in the H1, as I mentioned, because of the domestic as well as global interest, excitement that we are seeing for India. We had 163 crore of revenue coming from leasing over roughly 35 acres of land across World City, Jaipur, and Chennai. And we'll continue to find more clients in that spirit. A lot of exciting pipeline for us that exists for us to offer our land and services to all of our clients. In some areas, we are running out of land, but we are creating expansion opportunity with our partners. Quarter two specifically, FY25 was strong for us. We had of the 163 crores, 87 crores came in quarter two, which is mostly from Jaipur and a little bit support from Chennai, Mahindra World City, Chennai. I'll ask Avinash to cover all the financial details, but I think if you look at the health of the business is quite strong, which is reflected in our cash flows. I think we had one of the best first half, and compared to last year first half, we more than doubled our cash flows, operating cash flows. So he'll cover more that in detail. But business continues to be strong, healthy pipeline both on the industrial side as well as on the sales side. Some slowdown that we saw in the quarter two for residential sales, but we'll more than make it up in the next 2 quarters. So Avinash, over to you.
Thanks, Amit. I'll cover the financials, and as you all know, many of our operating entities, be it from residential business like Mahindra Homes or Mahindra Happinest, and even IC business, which is the World City Chennai or World City Jaipur, etc., are not consolidated on a line-by-line basis. So we basically have a share of net profit or loss from the JVs or associates. So we cast our accounts based on Ind AS and which are now in public domain. So let's talk about a few lines on H1 performance and then move to Q2 and a little bit about cash flow, which Amit alluded to. So if I look at H1, the consolidated operating income is about 196 crores, which is almost 70% higher than H1 of FY24. And you'll notice that some of the cost line items such as employee costs and interest costs have gone up, but those are exactly in line with how the business has grown in the last 12 months specifically. If you look at share of JVs and associates, that profit has actually tripled to 73 crores from a base of 25 crores in H1 FY24. The PAT has also shown an improvement. It's at a negative 1 crore as compared to a negative 23 crores in H1 FY24. Calling out specifically with respect to quarter two, the consolidated total income here stands at about 16 crores. This is slightly lower as compared to 25 crores or 25.7 crores to be precise in Q2 of FY24. The share of JVs and associates in Q2 as well is up. It's at 36 crores as compared to 1 crore in the corresponding quarter of the previous year. The consolidated PAT after the non-controlling interest, etc., stood at a loss of 14 crores, and that's how the H1 is at -1. From our overall H1 performance perspective, this is actually against a loss of 19 crores in Q2 of FY24. The operating cash flow, which is what Amit talked about earlier, which we measure excluding the cash outflows related to land, was almost 261 crores in Q2 of FY25. This was as compared to Q2 of FY24 much higher. It was at 118 crores in Q2 of FY24. So cumulatively for H1 of FY25, we have an operating cash flow of very close to 550 crores or 548 crores to be precise, almost 2x of what was recorded in H1 of FY25. So it is 249 crores versus 548 crores. This is reflecting the strong collections in our residential business as well as the strong performance of the IC business as we spoke earlier. In all, the net debt of the company now stands at 477 crores on a fully consolidated basis. And this now, on a net debt to equity is at 0.26 on a fully consolidated basis. So it's improved over what we saw in March 24. In fact, the costs with respect to interest have in fact come down in Q2. If I look at Q1 of FY25 as against Q2 of FY25, our borrowing net cost, or weighted average cost as we call it, stands at 8.83, and that is actually down by 13 basis points as compared to Q1 of FY25. So overall, the strength is reflecting in the cash flows as mentioned earlier, and that's what we have for the financials. So we'll leave it open for questions if any, and take them.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and one to ask questions. The first question is from the line of Rakesh from Nine Rivers Capital. Please go ahead.
Hi, am I audible?
Yes, sir. Please proceed.
Hi, yes, sir. Good morning, and thank you for the opportunity. Sir, a couple of questions from my side. In the opening remarks, you mentioned the number of projects that will be launched in H2. Can you please talk about the name of the project and the GDV? So few of the projects that I could understand, one is Kandivali project, Vista, new project in Borivali West, Malad. If you can give in detail what is the actual launch pipeline in H2 and the value of that will be great.
So, so let me just give you a quick indicative value, Rakesh, on that. So Vista will have more than 1,000 crores of inventory. I think we haven't decided whether we launch the retail part of it, but the residential part would be between 1,200 plus minus that will be launched. That's one. The code name Navy in Malad is roughly 1,000 crores. That's another large project for us. We have gotten we are there in terms of getting all the concessions and approvals, but it's a little bit complicated given multiple plots involved and so many residents from the society involved. So final stages of that. So that's the number two. Third, project Crown. Crown will have roughly, we have started the process of getting approval. My sense is we'll decide exactly when to launch because we have around 30-40% inventory that's there. Roughly 800 crore worth of inventory is going to be launched in Crown Phase 2. 600 crore, it's a 1,400 crore project. 600 we launched earlier, and remaining 800 would be launched. That's the third one. And the fourth one, Pink in Jaipur is 200 crore plot in plotted development. And Zen 2, Bangalore, is roughly 250 to 300 crores. Alembic is something that I'll get back because the timing of that depends on multiple factors. The approval process, it goes through BDA, BBMP. There are some issues in Bangalore right now, not for us, for the industry. So the value of Alembic phase 1 will be around 700 to 800 or 900. The total project is 1,800. But we'll decide whether we want to launch the whole project in one shot or do it in phases. If we were to do it in one shot, we'll just look at the industry situation and our readiness completely. So those are the few, those are the names that I had covered, Rakesh. Hopefully that answers your question.
Yes, sir. Yes, sir. Correct, sir. Thank you. So coming to second question, when I see in this quarter, one of the reasons for lower pre-sales was a lesser number of launches by the company. But if I see the project which are already launched, there's also some kind of slow growth, especially when it comes to the Kalyan market or another market. Your thoughts on that?
You're absolutely right. My sense is the pre-sales growth is linked to the number of launches because you get the biggest bang for the buck when you have a launch. We had a couple of, at least one launch that was planned in Q2, which is deferred now from approval point of view. Our readiness is 100%, but just waiting for some approval. So that's the first part of it. If we have more launches, automatically it will augment the pre-sales. And we've seen that in the past financial years, past quarters as well. On the affordable side, value home side, which you are trying to cover on Kalyan and a little bit on Palghar side. So I think as we have seen, the affordable segment has been slower than premium, mid-premium, and let's say even luxury, which we don't participate. And they're affected by, let's say, high interest rates and many other factors which have affected the bottom of the pyramid, relatively speaking. But if I look at my Palghar phase 2, we have sold almost 75 units in this past quarter. The value of that is not fully captured in the number that you have. It will get captured in the subsequent quarters. But 75 units in 3+ months is very, very good. Similarly, in Kalyan, we are making good progress. I think the pickup in inventory is happening. We have to just price it right and make sure that customers understand our value proposition. But the value of that is very small, Rakesh, because of the affordable nature of the segment.
Okay, sir, I got it. Sir, one last question from my side. With respect to the new business development, we had guided in the last year. This year, new business development will be much higher than the last year, the business development. So any thoughts, any guidelines with respect to new business development in F25 and F26, and along with the land parcels we have in Thane? That is from my side, sir.
That's a good question, and that's a broad question. I think let me answer at a conceptual level first. Last year we did 4,400 crore of GDV. For us to maintain our growth trajectory, we need to definitely surpass that. So that's our target. Go beyond what we have done in the past year. However, we want to be very careful not to be in the deal fever, given where the market is today. Every deal that we see, and we are very glad that we are seeing good number of deals. And now at least we are many times first port of call for many of the deals that I have mentioned the previous call also. We are applying a very, very strong financial lens to all the projects. If the expectations about land prices is very high and the pricing and the costing doesn't work out for us, we end up saying no to projects. And we have said that after going through the details, after initial term sheet also, we have said no to the projects because we just don't think that they will serve us and our shareholders well if we sign a bad deal just for chasing the deals, right? So my sense is we will pick the right deals, and there's a lot in the pipeline. We don't have a dearth of deals in the pipeline. We just hope to close the right ones soon, and we'll keep you updated as more of these deal announcements happen over the next few weeks, months, and years. So that will be short answer to FY25 and 26. We'll follow the same thing. We'll be careful about signing the right deal. And then about Thane, okay, as you said, Thane approval processes are very cumbersome. I think in the past we talked about 663, 1A exit, etc. That's done. The next set of approvals are underway. Our goal is to launch at the earliest, but given the elections and national elections, now state elections, and many changes that keep happening, I just don't want to give you any unreasonable timeline that we can't meet. My sense is it will be take another 12 months to 18 months for us to bring that to the market.
Okay. That's from my side. Thank you, and Diwali wishes to you and your team. Thank you.
Thank you, Rakesh. Best to you.
Thank you. Participants who wishes to ask questions may press star and one now. The next question is from the line of Prem Khurana from Anand Rathi Shares and Stockbrokers. Please go ahead.
Yeah, thank you for taking my question, sir. Sir, two questions. So one was, I mean, if you could help us understand where are we in terms of approval process for Santa Cruz. I mean, in terms of acquisition, was our first project in terms of on the redevelopment side, but then seems as if Navy Nagar seems to be moving faster than Santa Cruz.
Yeah, good. Thanks, Prem. And I think in full transparency, you're right. It's moving slower than what we wanted it to be. It was our first one, but our second and third seem to be moving faster than the first one. The reason is the following, and this is a learning for us. This is a roughly 500 crore project, not very large, but it is an amalgamation of two different societies, Nextera and Westview. And they have two different management committee, two different lawyers, two different set of stakeholders, and that has taken a lot of time to get alignment with them to get all the things done or aligned in the definitive agreement. So that's something that's taken time. I don't think we have reached the stage of getting even approvals right now. We're still trying to get both the societies to agree, and hopefully it will happen in the final stages for the last 2-3 months. One or two clauses that have affected us, but hopefully it will close as well.
Sure, but I mean, given the fact that Borivali seems to be a combination of 7 odd societies, I mean, have you been a little careful in structuring the transaction this time around compared to the way it's been with Santa Cruz?
Sorry, Prem, your voice wasn't clear. Can you repeat the question?
I was asking, I mean, as far as Borivali is concerned, the recent project that we've been able to manage, there again, you have multiple societies involved, right? And with Santa Cruz, I mean, we're dealing with only 2 societies. In case of Borivali, these would be 7 odd societies.
Correct.
Have you made any changes in the way we approach the redevelopment, wherein, I mean, you would require to deal with multiple societies, or even Borivali could run the same sort of risk, wherein it could take you some time to kind of get them on board?
Yeah, that's a great question actually, and I'm glad you asked. The Borivali societies are part of cluster redevelopment, so they win together and they lose together, right? Whereas Westera is where the relationship between society is not very, I would say, constructive, as we have seen. And that is causing the problem because somebody's gain is somebody's loss, potentially, as perceived. Whereas in Borivali, that's not the case, right? If they stick together, they all benefit. And we also applied learnings from Westera, that how to actually get the key terms which are typically of dispute or negotiation sorted out sooner rather than later. And that's also helping us in terms of moving the speed along. Our hope is that Borivali will move faster because they've been stuck for a long time and they have realized the value of that whether they should be aligned or they should keep fighting. I think hopefully the same wisdom will prevail with some of the other situations, including at Westera.
Sure. And so one question on IC and IC set, if I remember right, whenever we used to lease out some land, I mean, we used to give some time to our tenants kind of get processing unit in place. But I mean, how I see it is essentially we have 147 odd customers in case of Jaipur, and only 89 seems to have commission operations. There are 50 odd, I mean, wherein we've given them the land or they've taken the land on lease, but then they are yet to commence operations. So how do we, and the idea would have been to kind of make them operating at the earliest possible so that you are able to create some sort of employment, some sort of economic activity which would help you to kind of get some more tenants, right? But it's been as if, I mean, it's taken a little longer than what you would have envisaged to kind of make them start working at the ground. So why would this situation be there?
Yeah, I think it's a great question. I think we track that data very carefully, and even so in the last few months, we also work very closely with our partner RICO to highlight where we need help from them. In the past 12 months, we have also taken land back from those customers or clients who signed up for land and didn't do anything for the longest period of time. We've also given notice to a few. So absolutely right, we are doing the cleanup, but the number that you have in terms of 50 is slightly different as we track it. There are many who are in the planning stage and we're carefully tracking that. There are others who are awaiting the approval for doing the construction. And then there are few who have actually started something, then they're waiting for, let's say, capital or some other approvals, etc. So if you exclude all these which are in the pipeline who have no intent issue, if I can call it, it's less than 5 or 6 who have not done anything as of now. And we are tracking each one of them and pushing them along to start their work or give the land back to us. And since we have already done this land buyback, so to say, all the customers, all the clients understand that this is something that they need to take it seriously. Otherwise, they'll find it very difficult to retain a land and not do any activity.
Sure. Thank you, and all the very best of you.
Thank you. You may please press star and 1 to ask questions. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi, Mr. Sinha. Congratulations on a decent quarter. So my first question is on business development, and I think last time we had mentioned we are setting up a platform. So first of all, on the leverage side, the debt has gone up. So how much further headroom we have in terms of absolute debt? What are the levels which we'll be comfortable with to take care of business development if we get some opportunities on land side? And secondly, on the platform, so any update there, if you can help us understand whether once the platform is, what kind of structure the platform have? I mean, will you contribute equity from here or the parent will contribute? And why is the parent not looking at directly doing a rights issue or getting funds in at the MLDL level, because that will also help us on our net worth and then further leveraging that worth to do business development?
Yeah, no, great questions, Parikshit, as always, and thanks for your comment. I think there are 3 questions that you asked, and we answer them sequentially. I think in terms of the deals, right, first question was on the deal side. I think we have continued to, hopefully you will hear positive news when we find the right deal. I think, as I mentioned, we have a good pipeline. If I could close, if I wanted to close like 2-3 deals, I can close it tomorrow, to be honest. But we're going through all the financial, legal, all the diligences that are required for us to make sure that those are good investments for us. So I'm actually not worried too much about a business development. This was a very last year for us, and you've seen how much we scaled with people and resources and our own invest to actually address that. But as I mentioned in my upfront comment, that the expectations of some of the landowners are very, very unreasonable at times, and it's better to walk away, let market cool off. Let's see what's happening in Delhi now. The land prices are cooling off now because everybody realized that the prices are unreasonable for launches, and then same thing for Hyderabad, as you know, right? So on the deal side, I'm less worried about that, right? On the platform, I think advanced stages of discussion, but these are let me put it this way, they are quite confidential right now. I would hate to give the names nor or the dates of when they will conclude. I think I would say that we're making good progress. This no promises, but at least this quarter we should see a closure on at least one way or the other, discussion fructifying or not. So that's something we'll keep you updated, right? Yeah, so that's the second one. Third one, I think you're absolutely right. We analyzed and shared in our board the kind of equity and the debt that has been raised and our parent is looking into it. But right now, from our own MLDL perspective, we have the ability to actually fund in the platform the right amount of equity appropriately. Our debt to equity ratio is still very conservative. We were at 0.35, 36 at the end of
3.4 March.
Yeah. Now we are at 0.26, right? So we want to keep it conservative, and we work very closely with our group treasury to make sure that we continue to be conservative on that front. We don't want to use debt. Debt is needed, but is it like a necessary evil? But you have to be very careful given the business that we run, right? So we are very cognizant of that and very conservative. So that's where we are. And Vinash, you want to add anything?
Yeah, I mean, you mentioned about overall debt going up. Actually, that's on a gross level, Parikshit, if we look at it, it's gone up only by about 30 crores. The net, the debt stands at 477 crores, which is pretty healthy, as Amit mentioned. 0.26 is what we convert to from a net debt to equity ratio. And I mean, typically, if we look at some of the comparative, players in the market, the net debt to equity ratios are way higher than this, going up to 0.6 or even 0.8 at some point in time. We've in the past mentioned that we want to be conservative here, not go beyond a threshold of say 0.5 or slightly higher than that, but we want to be conservative. So there is legroom available in terms of fundraise, and that's where we would look at funding our growth.
Okay. So Amit, my other question was then whenever this structure is in place, as and when you are ready to announce it, so will that be the only structure where you will raise funds to deploy in land, or you have the option to directly also choose land deals where in MLDL level you can buy outright lands?
Yeah. I think we will have the flexibility, absolutely. But what I've seen of our efforts is we just align with our partner typically. And even though we have the structural flexibility to do things beyond the platform, we may or may not do it just to make sure that we are fully aligned with the partner. So short answer is structurally yes, but principally maybe not, right?
This puts a lot of another layer between the growth and the management and the partner whose interest is also to be taken care of, and expectation of IRR. Again, so one side we have land prices which is going up, so then you also have to share IRRs with your partner. So won't it create further delays and bureaucratic hurdles to pass through the muster to get the land deals? Because now the kind of business development we are targeting, even if we do 4,000, 5,000 crores of business development on the new land parcels, that will require almost 400 to 500 crores of capital. So the quantum of capital going to a land is increasing. Then you have a partner again. And a lot of deals which you do directly now, it has to pass to the partner. So
Correct.
delay. Because now we have built a momentum in the last 2-3 years. Somehow I'm sensing a little bit of discomfort that this momentum, I want a reassurance from you that, the momentum continues and the structure and other things may not delay our target of like 10x, 8,000, 10,000 crores of sales in the next 3, 4, 5 years. So broadly, that is where I'm coming from.
Yeah. No, fair point. And I think that's why choosing the right partners are also very important for you. I'm worried about the same thing. We typically call it operational freedom, operational independence. Obviously, there will be reserve matter, veto rights, etc. But there should be a principal meeting of minds and ways of working so that we don't create unnecessary bureaucratic hurdles when we have to move fast. You've seen in the past we have closed deals in like 2 weeks time frame, right? I don't want a situation where market is hot and then we are stuck because a private equity partner's internal process will slow us down, right? That would not work very well for us. So choosing, and that's why right now we have luckily a few options, and we will choose the right partner who will match our, from a strategy perspective, they are aligned, right? What we want to do, what we don't want to do needs to be very clear. And they are aligned in terms of how we think, how we operate, how we'll be creating value for each other. And third is something that I care a lot is about, are we able to learn from them and bring more discipline in our way of execution, right? At the end, this is a business of choices and then execution. Once you make those choices, you have to execute them very well. So that's the part that I look forward to learning from my counterpart. It's going to be, plain vanilla. I'll just give you capital and I'll keep asking a question. That may or may not work for us. And there are certain partners who can do that. I think we're looking for the right level of value creation from their side also, so that we both, we as an institution become stronger and better.
So just one more thing on that. So the parent, how is the parent thinking about it? I mean, there are two ways of doing it. Either you directly do it at the entity level. And so why is parent choosing to get a private equity partner here when other companies or peers, I mean, we're not seeing this kind of a structure, especially in a market which is doing so well. So how's the parent thinking, and whether this platform will be just plain vanilla equity platform or it will be a structured kind of a platform?
So short answer right now, it will be an equity platform. It's simple, right? We put 51, maybe they put 49, and we share the return. So in a way, it's pure equity platform. There is no like quasi debt or anything like that. It's upside, downside we share in the ratio of our capital structure. I think at the group level we've had multiple discussions how we actually how should we think about what we are seeing in the industry in terms of QIP and prefs, etc. Discussions are underway, but Mahindra as a group are very, very conservative about doing things. But it's needed for us to show that we have capital at the end, right? I think we will find capital to grow our business. One way is getting external capital, fortifying our process, and then potentially at the right time we'll look at QIP prefs at the right time. But that's not something we are starting right now.
Okay. But you have capital to contribute to this platform, or will you require to do a fundraise at the entity level and then through that you seed the capital into this platform?
Yeah, certainly. So as we keep evaluating, and of course the kind of deals that will go through to this we'll be choosing, as Amit mentioned.
So this could be a multiplier then. So this could be a multiplier, the partner bringing in a kind of equity and you contributing. So in fact it can end up adding more.
Yeah, exactly.
Okay.
And the other thing, Parikshit, is the very important part that is tricky for us is many times we have the cash. Like we have right now 600 crore cash sitting, which we can't upstream efficiently.
Okay.
Right? So, and either do a capital reduction, which is a painfully long exercise, like through NCLT, or you do dividend distribution, which is not tax efficient, right? There is a lot of cash sitting for us in different entities, which helps us in terms of bringing down our net debt to equity ratio, but we are just not able to deploy that cash. So that's another consideration for us to keep in mind that, hey, right now, so much cash is there that we can't use. So it just gives us flexibility, but also an avenue to source capital in a more efficient way.
Okay. Just the last thing on this, Vistas, now we have phase 2 launch coming in. So how are you thinking now beyond that? And what is the total pending land payments as of now? That's it. So much.
How we are thinking about Vista phase 2 is that...
No, beyond that. So beyond that now Vista will be done. So we need to look at the next set of land coming in from the parent company. So any thought there? And also what is the total pending land payments to be done for all the land parcels which we have acquired?
I think the total Kandivali related payment is done. There's only TDR. Like how much is that?
About 100 odd crores.
100 odd crores is the commitment that we have to close all the Kandivali Vista related payments, right? So that's short answer. I think.
Pune, Bangalore, how much is pending? Olympic land and other Pune.
Oh, okay. So Pune, I think Pune will have another probably 60-70 crores, right? In the short term, then there is after 3 years, like with EC we'll have to make some payment. approval, and then everything else is back end when we get OC and inclusive housing. So that's that. Those are some of the big ones, right? Wagholi and this one, right?
And Alembic?
Alembic was outright. We paid for that one. Yeah.
Okay.
Alembic is outright. Good Host is outright. The Sai Baba is, low capital for us, which we'll do at the time of DA. So I think most of the payments are done from the previous land parcel. I think your question was how much is the land commitment that we have. So it's only two of them, right? And then from what will happen in Kandivali, I think, that's something it's M&M's decision, right? And they will decide based on their business priorities, but also they have a factory and other things that is going on. So we can't really comment on their decision. If that opportunity is made available for us, we'll have to find a way to work on that. But that's not a public open discussion at this time.
Sure, Mr. Sinha. Thanks for all the answers and wish you all the best. And happy Diwali.
Yeah, thank you. Thank you, same to you.
Thank you. The next question is from the line of Bharat Seth from Quest Investments. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, we have spoken a lot on our residential. So if you can give little more color for this industrial side and in your opening remarks, you said that we are some shortage of land as well as buyback of the land. So when we buy back from where the customer is not developing, so what rate do we buy back? And if you can give little more color, and we had a certain project in Gujarat and Maharashtra where we had some kind of a land. So when we like to launch and looking at the kind of opportunities industrial side happening.
So great question. I'm glad you raised that. Let me give you a quick summary of the industrial business, and then I'll come. And maybe let me answer the first question. How do we acquire the land back, and then I'll go into IC part, right? So we've done two of these already in a major way in the last 12 months. One in Chennai, the other one in Jaipur. And there are, when the lease was offered to them, there was clearly two parts of the lease structure. One is whenever the land sells, there is a transfer fee that's charged by us as a master developer. So they have to pay that. So that's a certain proportion, which is meaningful. Let me put it this way. And the second one is the land would be acquired at either the original price or close to a price that we agree, right? And then we have the option ability to actually market the land the way we want it, right? And both the cases we have been able to create a very healthy spread by buying the land at the right price, as well as generating the transfer income from the land that we have. So these may not have the margins that you will get if you had the land acquired from day one, but these are, I would say, healthy margins for us. And since the pricing in, let's say, Chennai has gone up significantly, because there's practically no land available to us in Mahindra World City, Chennai, the spread is very healthy, I would say, right? Even though the purchase price is higher than the legacy purchasing price. So I just want to assure you that these are all very sound economic decisions for us, and they are helping us improve our path, to be honest. So that's why we keep an account as we take any decisions of this kind. So that's the first part. Let me cover the IC business quickly, and I will not take too much time, but we have 5+1 IC components in our portfolio. First is Mahindra World City, Chennai, 90% leased out. We have some land that will give us a healthy revenue for IC business, which was bought back actually. Just same example that we denotified that SEZ land that we bought back. So that will have a healthy, we already have an LOI for that. Then that's the first one. The second one is OC1 and OC2, Origins Chennai 1 and Chennai 2. OC1 is almost sold out except for one parcel that is stuck with litigation, and OC2 is something that we are planning to launch in the next 3 to 6 months. Sumitomo has been a partner with us in OC1, and they have shown interest to be a partner with us in phase 2. That's being negotiated and closed as we speak. That also has healthy potential of the order of 100 to 150 acres of land. OC2B is also there, which will tackle up after launching OC2A. So these are the two in Chennai. The third and the largest opportunity we have in Jaipur, Mahindra World City Jaipur, 3,000 acres. We have roughly 800 acres of land which is unleased, a lot in the SEZ area. So we're working with the government to see how we can convert that land into DTA land, where we have huge demand and we are sold out from our existing portfolio. We also have roughly 400 acres of land in our social infrastructure net area after all those one client and the adjustments or efficiencies of 227 acres. That's where the pink launch on the residential is being planned. That's significant potential for us, but it has had some historical issues in terms of taxation. We had just received a notice about that. We're working very closely with the government to close that out. So that's the third one. The fourth one is in Ahmedabad. This is roughly 340 acres. We had tried to find an owner who would be interested in the entire 340 acres, but we got some inquiries, interest and all, but it has not fructified. So we have started now the business development effort for Origins Ahmedabad as well. It's on our leadership that drives our Jaipur. We feel that as there is significant momentum in the industrial sector, manufacturing sector, sooner or later this land parcel will also find a good set of clients. And we are ready to have a largest anchor client to start this. Instead of selling it 340 acres to another developer, another industrial client, we want to develop now just like World City Chennai, Jaipur or Origins. So that process has started for us. And then finally on this side, on Maharashtra, we have Origins Pune, which is 60 kilometers from Pune. A very good location next to one of the MIDC industrial locations, 60, very good locations, I would say, from an industrial point of view and potentially for mixed-use residential as well. That we've gotten some prior exits like 63-1A and everything has been done. Now we are finishing land aggregation access road for us to launch that at the earliest. Those are the 5. And when I said 5 plus 1, the last part is the Actis joint venture that we have. We had committed 200 crores to that, into that. It's a BTS plus warehousing, built to suit. Actis will have roughly 65% to 70% stake. We'll have 30-35% stake. We've already moved forward with one target, now one potential target. Now the second one is in the pipeline in Bhiwandi. And that's going to be an important one for us to build. We are discussing at the board level, should we increase our capital commitment to that business, because a shorter lead time, you can flip the asset and get a much higher return from that. So those are the 5 plus 1 businesses that we have in industrial. If you look at overall potential that we have, we believe that this business over the next 10 years has a potential for roughly 2,000 crore of PAT. So I just wanted to repeat 2,000 crore of PAT potential that IC businesses has in the next 10 years. It has also served us well in the past, but it has the ability to serve us better in the future. And that's something that we are consciously building the team, building the portfolio, so that we continue to position ourselves as a strong IC player which has a pan-India presence with the right set of government and private partners. And that business is becoming more and more important for us, given Mahindra brand can offer multiple other products and services like sustain, logistics, other things. So that's a very good business that we are investing behind in a smart way.
Sir, 2 questions on for explanation for. See, when the Jaipur, converting from the SEZ to DTA, and we are working since more than 5 years. So what is really preventing? That is one. And second, when you are talking of 2,000 crore kind of a tax, so is our share or it's for joint venture?
Short answer on both. It's our side is 2,000 crore after adjusting for minority interests, right? So that's 2,000. But it's lumpy and all, and we have to bring that to bear. So that's something that you should know. At least I want to give you a top-down view. And then SEZ to DTA, you're right. I think in Jaipur, see, in Chennai, it's been much faster. For some reason, Jaipur has its own set of delays, challenges. But we're working through it. Each state has its own machinery and the system. We have to respect how they work and convince them that it's the right thing for them as well as for rest of the stakeholders and the stakeholders. That's
what is the land parcel we are looking for, SEZ to DTA?
What is the, sorry?
Size of the land parcel for which we are working SEZ to DTA?
It's roughly 500 acres is the size of the land that we can, but not all can be converted into DTA because there are some constraint physically with the existing SEZ infrastructure. So between 400 to 500, yeah.
Thank you. And all the best.
Thank you, sir. Sir, can we take one more last question?
Sure, go ahead.
Thank you, sir. We'll take the next question from the line of Ronald Sioni from Sharekhan Limited. Please go ahead.
Yeah, thank you, sir. Thank you for the opportunity and congratulations on good performance. On the equity platform, sir, I wanted to know if you are looking for any kind of size in the equity platform, one, and the second one is that, the target area, because as you said that, affordable has not been picking up as we would have expected, and super luxury has been doing very well, if you say it in MMR or NCR. So would we still stick to, mid segment, or we can, expect some super luxury kind of projects also? And what will be the size of the overall equity platform?
So, yeah, thanks, Ronald. Good question. I think the equity platform, we are thinking it to be at least 1,000 to 1,500 crore by each partner. So 2,000 to 3,000 crore is the size of the overall platform, 50% from us, 50% from the partner. So that's what anything less becomes not very exciting for scale up, right? So that's what we are thinking about. And the second question was the segment focus. Segment focus was, I was thinking, in the past calls I've clearly said we will not pursue affordable anymore. So that segment is out. And while super luxury and all are very exciting, our focus is going to mid-premium and premium. And the way we segment the market is affordable, mid-premium, premium, and luxury, right? So we'll play in the middle two segments. We'll not play in the two extreme segments. And I think if we have track record of doing premium projects and some of the premium projects, if they are in expensive neighborhood, automatically become luxury. So if you do, let's say what we are doing at Luminaire is like 7-8 crores. It's a very nice project with balconies and all those things. If you put that in South Bombay, that 7 crores become 27 crores, right, automatically. So we have the ability to make premium products, but we don't want to go into luxury in a big way. We'll continue to develop a track record, build capabilities for mid-premium and premium. Once we have that, then we say that, hey, if you want to go to more expensive neighborhoods where the ticket size goes north of 15, 20, 25 crores, then we maybe will look at it. But right now, our sweet spot is we want to make some of the best homes which are in the budget of, let's say, 2 to 7 crores, right? Which is what is the market opportunity that can be taken up seriously.
Okay. And excuse me. Just one suggestion here. Your focus would be, mid-premium and premium, but just one project of super luxury would, gives a lot more, brand value to the company itself. So just a suggestion, and even if you don't focus on one project, a landmark project would, give a great brand value for the company.
No, absolutely. I totally agree. We'll sign you up as
Best of luck, sir. Thank you very much.
Thank you. Ladies and gentlemen, we will take that as the last question for today. I would now like to hand the conference over to Mr. Amit Kumar Sinha, for MD and CEO, for closing comments. Over to you, sir.
No, thank you. Good discussion. To be honest, I feel that there is a lot more momentum in the market than what the quarter two sales numbers reflect us, and that's an area that will hopefully be, you'll see more action in the quarter three, quarter four. But overall, we are making good progress in the right direction. Lumpy business, you always have ups and downs and delays by a quarter or a few days. But we are building strong set of capabilities for us to manage the ups and downs of the business in a less noisy way. So you'll see more action, more excitement from us in the coming days. We also changed the investor presentation a little bit for you to get a good view of where our inventory is, what's the opportunity. So take a look. If you have all questions, let us know. Happy to answer them in an offline meeting.
Thank you very much, sir. Thank you, members of the management. On behalf of Mahindra Lifespace Developers Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.